All right, today we are diving deep into the latest earnings report from Macy's. We're going to unpack how they wrapped up their 2025 fiscal year, and more importantly, what their forecast for 2026 really tells us about the challenges and opportunities ahead for this retail icon. Let's get right into it.
But first, just a quick but important note. This breakdown is purely for educational purposes. It is not financial advice. Our goal here is to analyze the data and the company's own statements, not to tell you where to put your money. So, here's our game plan. We're going to start with the strong finish to 2025, then dig into the bold new chapter strategy that's driving these results. After that, we'll pivot to the more cautious outlook for 2026, break down the key market risks, and then we'll wrap it all up with the essential takeaways for any investor.
Okay, let's jump right into the fourth quarter of 2025. You know, the big headline here is pretty simple. Macy's had a fantastic finish to the year. They didn't just meet their goals, they actually beat their own guidance, which is a really powerful signal.
And this number says it all. Adjusted earnings per share, a key profitability metric, came in at $1.67. Now, what's so important about that? Well, it absolutely sailed past their own forecast. It shows they were firing on all cylinders during that crucial holiday season.
And how about sales? Well, we saw a 1.8% increase in comparable sales, and just as a refresher, that's a measure of sales in stores that have been open for at least a year. Seeing positive growth across all their brands tells you that customers were engaged in spending.
But, you know, when you break those sales down by brand, the story gets even more interesting. Bloomingdale's was the absolute star of the show, with comparable sales up a staggering 9.9%. That marks its best holiday season ever. You can see Bluemercury and the Macy's nameplate also grew, but it really highlights just how powerful that luxury segment is for the company.
So that was the final quarter. Now let's zoom out and take a look at the full picture for fiscal year 2025. And really, the story here is one of a comeback. After a few challenging years, Macy's is officially back to annual growth, and that's a huge milestone.
So for the whole year, a couple of numbers just jump right off the page. Comparable sales were up 1.5%. Adjusted EPS hit $2.32, again exceeding their guidance. And check this out. They maintained a healthy balance sheet with $1.2 billion in cash and returned nearly $450 million to shareholders. That's a very solid report card.
And this visual really drives home that brand dichotomy we've been talking about. For the full year, Bloomingdale's posted an incredible 7.4% growth in comparable sales. The Macy's brand, it grew by a much more modest 0.4%. It's truly a tale of two brands, with luxury doing almost all of the heavy lifting.
So you have to ask, right? What's the engine behind this strong performance? Well, the company points squarely at its big, multi-year strategy, which they've dubbed the bold new chapter. Let's see what that's all about. And you don't have to take my word for it. The confidence comes straight from the top. The CEO, Tony Spring, said he was pleased with the growth and progress. When the person in the corner office says that, it's a clear signal they believe this plan is not just working, it's the foundation for their future. At its heart, this bold new chapter really comes down to three things. First, modernizing the entire business, from the supply chain all the way to how you check out. Second, putting in the work to strengthen and, frankly, reimagine the main Macy's brand. And third, and this is a big one, accelerating what already works by pouring fuel on the fire of their luxury business with Bloomingdale's. Okay, so that's the story of a strong 2025. But now we have to pivot and look forward. And when we look at the company's guidance for fiscal year 2026, the tone changes dramatically. They're signaling a much more cautious road ahead. And wow, this table really lays it all out. On the left, you've got the solid results from 2025. On the right, the forecast for 2026. Net sales, expected to drop. Comparable sales, they're guiding to somewhere between a small dip and basically flat. And that all-important profitability metric, EPS, is also expected to decline. It's a real night and day difference.
So, what gives? Why such a conservative outlook after a great year? Well, the company says it's taking a prudent approach. Now, that's often management speak for, hey, we see a lot of uncertainty out there. They're baking in the potential for things like tough competition and a shaky economy.
So let's dig into that a little more. What are these headwinds exactly? What are the specific risks that are making Macy's so cautious about 2026? Now, every company's earnings report includes a section like this, a big wall of dense legal text often called a safe harbor statement. We're not going to read the whole thing, don't worry, but it's where they officially lay out all the things that could go wrong. So we've pulled out the most important points for you.
So when you cut through all that legalese, it really boils down to 4 key areas of risk for investors. You've got policy risks, think trade wars and tariffs, operational risks like supply chain snags or labor issues. Then there are market risks, the constant battle against online retailers and discounters. And finally, the weak one, economic risks. If people start spending less because of inflation, that hits Macy's directly.
All right, so we've looked at the solid 2025 results, we've unpacked the strategy that got them there, and we've peered into the storm clouds gathering on the horizon for 2026. Let's synthesize all of this down to the 3 main takeaways you really need to walk away with.
So here they are. Number 1, the bold new chapter strategy is not just talk, it's proven it can deliver real results. Number 2, despite that success, the outlook for 2026 is very cautious, and that's a direct reflection of those external risks we just talked about. And number 3, that brand dichotomy is absolutely critical. Bloomingdale's is the growth engine here, and its health is vital to the entire company.
And all of this brings us to the one big central question for the year ahead. We know the company's strategy works, but is that turnaround robust enough to power through the major economic headwinds that everyone is forecasting for 2026? That right there is the multi-billion-dollar question.
And that's our deep dive on where Macy's stands today. If you found this breakdown valuable, please go ahead and like and subscribe for more content like this. Thanks for watching.